All right, let's get right into it. Today, we're basically going on a treasure hunt, searching for a secret signal, something hidden deep inside the financial markets. And this signal, it might just be able to tell us exactly where the economy is headed next.
I mean, just think about it. What if there was just one number buried in all that chaos of daily trading that could basically act like a weather forecast, but for the entire economy? Sounds kind of like science fiction, right? Well, according to a really fascinating paper from 2019, it might just be real.
Okay, so to find this clue, we've got to go inside a place that, let's be honest, can seem pretty intimidating, the U.S. Treasury futures market. But don't worry, we're going to break it all down. We're really just on the lookout for one very specific thing.
So, what exactly are we talking about here? Well, to put it simply, a Treasury future is basically just a bet on where interest rates are going. It's a contract where you agree to buy or sell U.S. government debt, like a 2-year note or a 30-year bond, at a set price on a future date. This is the playground, the scene of the crime, if you will, where our mystery unfolds. Now, here's where it gets interesting. For decades, economists were looking in one place for clues: the prices of these contracts. Makes sense, right? But what these researchers found was that everyone was looking in the wrong spot. The real secret wasn't in the price at all.
Yeah, you heard that right. The secret isn't in the price of the bets, but in how many bets are being placed. It's all about the trading volume. And believe me, this one simple shift in focus, it changes absolutely everything.
So what is trading volume? It's just the total number of contracts that are changing hands. Simple. But here's the key insight, the big idea. High volume doesn't just mean it's a busy day at the office. No, it's a signal. It tells us that there are a lot of people out there with fundamentally different ideas about what the future holds. It's a direct measure of, well, disagreement.
And look, this isn't just some wild theory. The paper itself lays it out crystal clear. Volume is a mirror for disagreement. Think about it. When you see a ton of trading, it's because you've got a whole bunch of really smart people on both sides of a bet, and every single one of them is convinced they're the one who's right.
All right, so clue number 1 is in the bag. High trading volume means lots of disagreement. But that's only half the puzzle, folks. The real secret, the part that unlocks this whole thing, is found in the timeline. It's all about when that disagreement is happening.
And that brings us to the most important question of all. Are investors arguing about what's going to happen in the next, say, 2 years? Or are they placing these huge bets on what the world is going to look like 20 or 30 years from now? Because that distinction, that is the key that unlocks this entire forecast. And right here, this is the aha moment. This is where the two signals finally emerge. Okay, so when you see trading volume spike in short-term futures, like those 2-year notes, that's a sign of fear. It means investors are getting nervous, they don't want to lock their money up for too long. The paper even has a name for it, a flight from maturity. And guess what it predicts? An economic downturn. But on the flip side, when volume is high in those long-term 30-year bonds, that signals confidence. It means people are willing to make those big long-term bets on the future. And that predicts economic growth.
Former Fed Chair Alan Greenspan actually captured this feeling of fear just perfectly. This quote, it describes that whole flight from maturity idea in such a, human way. It's not about some complex risk analysis on a spreadsheet. No, it's a gut reaction. It's that feeling of wanting to pull back, to shorten your timeline, to just disengage. And that's exactly the feeling that all that high short-term volume is picking up on.
Okay, so we have this really powerful idea, right? That the timeline of trading can tell us about economic sentiment. But is it just a cool theory? Or can you actually turn it into a practical tool? Well, you can probably guess the answer. The researchers did exactly that. They basically created a brand new economic barometer. And they managed to boil this entire huge concept, this battle between fear and confidence, down into one single, powerful, easy-to-track number. They call it the volume difference factor, or just VDIF for short. And the way you calculate it is, honestly, it's beautifully simple. You just take the trading volume from the long-term 30-year futures, and you subtract the volume from the short-term 2-year futures. That's it. If the number you get is high and positive, it means confidence is winning the day. If it's low or negative, well, that means fear is taking over. So, the big question, does it actually work? Oh yeah, absolutely. The data is just so compelling. When that VDIF factor is high, pointing to more long-term confidence, what follows? Periods of higher GDP growth. And when the VDIF factor is low?
You guessed it. It comes right before periods of lower growth. It's a clear pattern. And you know what? It's the exact same story for the stock market. A high VDIF acts as a really positive signal for future stock returns. A low VDIF, on the other hand, tends to predict weaker performance ahead. It's like it captures that underlying economic tide that, either lifts all boats or leaves them stuck in the mud.
So we've seen it works for the economy and it works for the stock market, but here's the truly remarkable part. It's how far into the future this little signal can see. I mean, according to the study, it has predictive power for up to 6 quarters. That's a year and a half in advance. For any economic indicator, that is an incredibly long and valuable forecasting horizon.
So, what all this really means is that VDIF, it's not just some neat statistical trick. It's more than that. It's like a direct window into the collective psychology of the entire market. It's literally telling us a story about our shared economic future.
So, okay, why does any of this matter to you? Well, for starters, it's a real-time sentiment gauge. This isn't a survey where people just say what they're thinking. This is a measurement of what they are actually doing, with billions of their own dollars. It is the ultimate put your money where your mouth is indicator. It shows us that raw battle between confidence and fear. And maybe most importantly, it gives all of us a forward-looking peek into the real economy.
At the end of the day, this is the big takeaway. We started this whole thing looking for a hidden clue, right? And we found it. A simple difference in trading volume that somehow manages to cut through all the daily noise, and it reveals the market's deepest, truest convictions about our future.
Which, of course, brings us to the biggest question of all. We've got this powerful tool, right? A hidden forecast that's being updated constantly, every single day, by the market itself. So, what do you think? What is that signal telling us about the economy that we're heading into right now?